Hi, welcome to the space. Gonna wait for people to join in. So yeah, GameStop is more or less worthless. I don't know why there's so much obsession with this stock. Same thing kind of happened to AMC. AMC has dropped 90 something percent, leaving a lot of people poorer, much poorer for the wear. I think what happened with AMC is there was a basic misunderstanding of investing fundamentals. Those fundamentals included the toxic debt situation the company was in, and that resulted, not understanding those fundamentals resulted in a lot of people losing a lot of money. Same thing is happening with GameStop. GameStop's more or less a worthless company, but there's some extraneous factors, which I strongly recommend ignoring, that are leading to people paying attention to this company. Company is not interesting, has not been interesting in 20 years. Retail stores in general have suffered. The best retailers have been able to maybe keep their stock price flat. If you can name some retailers that have grown over the last 10 years, I'd be curious. But GameStop is a company that doesn't need to exist. Digital distribution of games is taking over. The collectibles market they serve is small and not that interesting. And you know that the company has made strategic missteps. They bet a lot on NFTs, and they did that just as the NFT market imploded, which suggests to me that there's no real brains at the company. But more importantly, look, it doesn't matter what market participants think of the stock. There's a market participant here that's popular. This is a guy that has traded the stock before and posted on a message board. These things have been around for 25 years. There are people who are a lot richer, who are a lot more impressive traders, and nobody cares when they buy or sell stock. So why should they care now? This is just lemmings following each other into the sea. So happy to take some questions. Kaki, what do you want to talk about?
Yeah, man. Thank you so much, Farmer Bro, for inviting me up here. Now, I understand the whole dynamic of, a company P&L. There's a certain value that a company can trade at. But, at the same time, I understand the message that is trying to be sent with that statement. But, a lot of people who buy these aren't buying it because of that reason. It's basically for entertainment purposes. And so my question is why I mean, do you feel like they should be allowed to set prices just because they think it should be that price based on P&L? I mean, why not if it goes to $1,000 based on supply and demand, that's how the market should work, not because they say it's
Of
because.
course. Yeah. No, the market is a supply and demand machine.
Yeah, so I mean, with a lot of these, I mean, do you suspect that anyone or they try to set prices based on valuations?
I think that when you have a lot of money and you're trying to invest in stocks, you try to buy stocks, you try to get your bang for the buck, right? Um, if you try to sell me a lemonade stand for $1 billion, I'm going to say no. But if you try to sell me Microsoft for $1 billion, that's a great bargain. So investors look for bargains, and GameStop's not a bargain. The company doesn't make any money, so why would I be interested in buying the stock when I take my hard-earned money and buy a real company?
Well, yeah, I mean, not you. What I'm saying is, if people want to buy it, they can buy it. If they feel like they want to pay $30, they can pay $30.
Sure, I think
But
they'll
it's
lose
up to
money with
them
it.
to do it. It's not up to
Yeah, I mean,
whoever's
people lose money all the time. People bought expensive stocks in the past, like AMC, and they got slaughtered. I mean, it's up to people to decide what to do with their portfolio. Sure.
But is that actually selling of the stock, or is that market makers and whatnot setting the price based on the
How much?
valuation that they
How
think
much?
it
How
is?
much time have you spent in finance? Have you ever worked in finance?
No.
Okay. Yeah. So market makers have zero impact on the stock's price. Market makers barely exist anymore.
Okay, so who has that impact now?
Traders buy and sell the stock.
Really? Is that really what's going on?
Really? I mean, what, do you think there's some mystery Illuminati that sets the price for stocks?
I do, yeah, because I watched an
I think you're a
interview.
retard.
Well, let me tell
How
you
old are you,
why I
kid?
think that. Let me
Kid,
tell you
kid,
why I
kid.
think that.
All right, I don't want to hear that.
Really?
How old are you? Yeah, how old are you?
20s.
Okay, you're in your 20s. What's your occupation?
Well, I'm not going to say specifically, but I do tech stuff for just a
Okay,
corporation.
okay. Listen, man, I've been in finance 25 years. I've done a lot of things. I've shorted a lot of stocks. I've bought a lot of stocks. I've been a publicly traded CEO. There's no Illuminati. I hate to break it to you. Santa Claus isn't real. It's just doesn't exist. Stocks go up and down based on what the stockholders do, and that's it. The market works as intended.
So, okay, so you think that it's transparent, it works based
Do
on
I
supply
think
and
I
demand.
know? I operated hedge funds. I worked for billion-dollar hedge funds. I was a publicly traded CEO. I've taken companies public. I've shorted companies into the ground. I've done illegal shit. I know. Yes, I know. I don't. I don't think. I know for sure.
Okay, so all of these people who say otherwise, they're just completely wrong.
Yes. Yes. You don't know anything about finance.
I
Who are you
don't.
listening
That's why I'm
to?
asking questions.
Yeah. You're right. Yeah, I'm telling you the answer. You know, it's pretty simple. It's a pretty simple explanation. GameStop's overvalued right now. The market will bring its price down over time, but assuming what I think is going to happen is going to happen. Of course, it's possible that management pulls a rabbit out of the hat and creates some great new product growth area, but it's unlikely. And you're much better off buying a company that actually has already established that, like a Palantir or something like that. Um, GameStop's revenue is going down. Palantir's revenue is going up. It's pretty. Sometimes this isn't that hard. People care about GameStop because it's got some social media buzz. But have you looked at 5,000 different stocks and you've decided GameStop's the one for you? That's what you have to do in investing. You can't sit there and say, "Oh, my friend told me that this is a good stock." You have to scrutinize every. Have you scrutinized every stock in the space that's equivalent to GameStop, retailers in this case? And you've determined that the most undervalued one is GameStop? Of course not. You're hoping and praying that GameStop's going to go up because of some weird short squeeze or some other, I hope that I can play musical chairs and force the stock price to go up. But the problem with that thesis is that people are rational. If the price goes up, the incremental seller comes out, right? The person says, "Oh, gee whiz, I got to pay my bills. I'm up $500 on this. I might as well sell and move on." And the propensity to sell increases with the price going up. The propensity to buy, theoretically, increases with the price going down. Uh, People will not diamond hand. We learned that the last time, right? Last time the stock went down 90%, we learned people will not diamond hand. Same thing with AMC. Nobody diamond handed. It went to zero. Everyone lost all their money. You know, I think it was called
But
Apes
let me ask
Strong.
you this. It seemed with AMC that it was such an orderly descent
Yeah,
to the bottom. So if your theory is that people will sell, at a price when it's high, you would expect it to go down
there's no
fast.
there's no net sellers or net buyers, right? Everything is a trade. The trade price is the last price, and the marginal impact, the marginal demand and supply at those prices get set by traders, right? It's not like you selling makes the stock go down. You selling is supply that a buyer may say, you know what, I don't want to keep buying because I see the supply here. So in any event, I'm going to circle around. Thanks for participating. Let's talk to somebody else. Hello. Getbusy.eth. How are you? Get busy. I'd like you to get busy. You're not very busy. All right, we'll move on to somebody else. All right, my friend is here, Lady Trader, and AI Council. Why don't some of you guys chit chat here?
Hey, my mic's on. Are you calling me, Martin?
I said, yeah, go ahead. What's on your
Yeah,
mind?
Cyrus, AI Council. I'm just wondering your opinion on what happened today with Berkshire Hathaway and the others. What was that all about? Will that happen again? What were the causes?
I mean,
Has it happened
software.
before? Go ahead. Sorry.
It has happened before. Software is inherently unpredictable. Um, you know, there's some software is better than other software, and there's an error in the software. I know some of my team members looked into it a lot more closely, but usually when there's sometimes called a fat finger trade, those trades get canceled. There's no lucky guy that gets to buy all the stock at a low price. They complain to the exchange. The exchange reviews the trades. They actually have, I think, a little framework for canceling those trades. And that's really it. It wasn't too exciting.
Right on. Thank you.
Sure. All right. Get busy. Did you want to say something? I'm going to get busy. Okay.
What's up, Martin?
What's up?
Hey, are you making any trades in this environment with GME?
So I'm an entrepreneur. I don't really trade actively. I think it's a short. Maybe I'll short some tomorrow. I don't know. But my job is to create value by growing my businesses. That's what I've done most of my career, and fairly successfully. And just going to continue to do that. The stock market is sometimes interesting, but GameStop looks overvalued. Last time I did calls like this, I think I see my friend Amy here. Amy knows last time we did these types of calls, it was because AMC was hot. We spent hours and hours and hours patiently trying to explain to people why AMC was overvalued. Hopefully saved some people some money, but AMC stock, just dropped and dropped and dropped. GameStop doesn't have the same toxic debt problem that AMC had that led its price to go from, let's see, split adjusted around $200 to it's now four or $5 down quite a lot, 98% from the peak. I like stocks that make new highs, not make new lows. GameStop is sort of has some. It's in the news because somebody bought the stock. I don't think that that's a rational kind of perspective. There's in fact, as you guys may know, just a couple weeks ago, GameStop hit almost $50, so it's about half that price. So a lot of people are holding the bag for that, and I think they'll hold the bag again. Now, it doesn't mean you can't trade. There are smart traders out there that they can guess the rhythms of the market. That's probably not you listening right now. Most people are not good traders. I'd say 1% of people are really great traders. They could do that for a living. Some of those people can outfox the rest of us. I'm not one of those people either. There's a lot of smart traders out there, but most people are not smart traders, and they'll lose their shirt trying to beat smart traders. Some of those smart traders, by the way, are computers. They're really hard to beat. Computers that people have spent, more than $1 billion developing. So, I think that, GameStop is just one of these stocks that's up quite a lot from its kind of pre-manipulated, if you will, or pre-promoted price, and it'll return to it. It's probably going to go down around 50% from here. I don't think the guy who's buying it really has anything to do with anything. There's a lot of people out there on Wall Street that are worth many billions of dollars that have made much more impressive trades. Nobody cares when they buy a stock or sell a stock. Stock might move a little bit. I remember shorting a stock, company created by a multi-billionaire named Al Mann. And a lot of people on Wall Street were mad at me because Al Mann was a billionaire and Martin Shkreli wasn't. And, Al Mann was going to create inhaled insulin. And inhaled insulin was a bad idea. And the inhaled insulin product was never a hit. And Mr. Mann passed away. He was a good person, I believe. He was a great entrepreneur. But his last act didn't work. His last act, He basically lost his whole fortune in his last act. There's a guy named Phil Frost who was also a brilliant entrepreneur. He created one of the biggest generic companies ever in pharmaceuticals. And his last act is still going on, and it's basically also consumed his fortune. There's a lot of people out there that make a lot of money and then they lose a lot of money. And there's some people that have a process that's robust that lasts forever. It's hard to know who's who. You only really know at the end, do you? After enough trades, after enough investments, after enough years, maybe you can tell. In statistics, there's something called p-value, where you can, using a sample size and different parameters, you can actually test whether or not a result is statistically significant. I can tell you that a couple of trades in a stock is not statistically significant. We don't know whether this person is the next Warren Buffett or not. And I would bet not, given my assessment of GameStop and its prospects. It basically is a company with no real assets. They haven't made a dime in cash flow in 2 years. That's not great. If you buy a stock, you're buying a share of a company. And when you buy a share of a company, you're hoping that that company is going to produce something for you, namely income, profits. Imagine if you were able to buy a $10 billion company in the private markets, like a private equity company might. That company might make you $800 million. And after 10 years or 12 years, you could have the entire company for free. You could even borrow some of that. That's called a leveraged buyout. And you can make many, many billions of dollars by doing that. With GameStop, over the last 2 years, the company hasn't made a dime. That's a problem. I'd much rather take my money and buy a share of that company I just described. That's basically what your average private equity company does. They're able to buy companies that are fairly boring for 8 times, 10 times, 12 times earnings. And GameStop's last 3 years of cash flow from operations, let me read this out to you. Last year was negative 204 million. The year before that was positive 108. So over 2 years, this company lost net, $100 million. How about the year before that? Was that better? No. They lost $434 million that year. So over the last 3 years, the company's lost $500 million. Now, that doesn't tell us about what's going to happen going forward, right? It's possible that going forward, the company's going to make a lot of money. But it's hard to do.
Martin, don't leave out that they just completed a 45 million share offering, last week?
Yeah.
I think book value is like $5 a change, $6 a change, something like that.
Yeah, I mean, so the downside is limited to $5. But the upside is very limited, given the company is engaged in the retail business. The retail business is not a great business right now. It hasn't been a great business in 20 years. If you look at the stocks of most retailers, the ones that haven't gone bankrupt, it's been a rough ride because stores are kind of antiquated concepts. Anyway, does anybody have a question? Let me move on to another speaker. Go ahead, Dom.
Hey, Martin, what's going on, man? Thanks for having me up. Good to see you again.
Sure.
So, question I got for you is, I think we heard, what was it, last week or the week before, that Biden's administration had vetoed a bill for current for custodianship, and I was wondering what your opinion is on that. And,
is this about? We're here to talk about GameStop, so I just want to.
Oh, all right. I mean, I don't know if you just don't mind touching on that for a second, like just the over.
I do, because we're here to talk about GameStop. But thanks for coming.
I think GameStop actually went to hit like 80 on the first go around with Meow Mix.
Yeah, I feel bad for anybody that bought at that price. Sakuzi, what do you have to say?
Oh, sorry, I didn't know the format in here. I just hopped in. Yeah, what's the vibes with GME that you guys are discussing?
Okay, well, thanks for coming, Sakuzi. Gradient descent, my favorite. What do you have to say? Oh, lady, you can always speak. You know that.
Thanks so much. So for GME, I mean, looking at the chart, like there are obviously, traders that are day trading, all of that. But then there are fundamentals too. Why do you think people are not looking at those fundamentals? Like what you posted on your page, that makes sense, right? Like those numbers, no one is looking at. No one is looking at the earning reports. No one is paying attention to all of the dilution that's happening when they are, when they keep pushing out more shares, right? AMC or GME, all of that. Like what happens? Like why do people not look at that?
I think that a lot of people basically, especially in good times, good market times, they're willing to sort of gamble instead of invest or trade. And we see this a lot right now. There are meme coins, as you know very well, maybe more than almost everyone, that don't have fundamentals. They don't even have a company, right? They're just a picture or something like that. And this is basically gambling, right? It's fun to gamble. That's why Atlantic City and, more importantly, Vegas and Macau are popular. Gambling's great if you have money coming in and if you have money to burn. Usually, these kinds of musical chairs games stop when there's depression or recession. I'm no economist. I have no clue whether there's going to be depression or recession, when and if, etc. We've had a pretty good track record for a little while here. No recessions in a long time, since 2008, really. But usually, if unemployment goes up or things like that, the propensity, right, that marginal buyer shrivels up because you know what, I'm having trouble making ends meet. I don't really care about GameStop. In fact, I might use it as a source of funds if the unemployment goes up and I need to liquidate some of my fun gambling money and start thinking about, how do I pay for this surgery? How do I pay for this prescription drug that somebody just jacked the price up of? How do I pay for these clothes? How do I send my kid to school? Those are the things you worry about in a recession because your income may be dropped due to unemployment or due to something else. So, then use the source of funds. But in good times where money's plentiful and you have excess money, you can throw them into a Caitlyn Jenner token or a Dog with Hat token or a GameStop because you want to stick it to the man and you think buying this stock is going to do something other than make the guy buying it maybe rich. You're willing to do that because you don't really care. You're happy to lose the money. It doesn't make a difference to you. You get your paycheck next week, and what difference does it make? But those of us who are trying to make good returns in the stock market, I think over the long run, we try to find the strategy is to try to find companies that are going to grow at a reasonable rate and you're paying a reasonable price and management's very good. And it doesn't seem to me that GameStop fits any of those criteria. Nevertheless, people like to gamble, and if something's going up, maybe it's going to keep going up. And then if they get hosed gambling, there's always somebody else who will replace them the next day. There's a sucker born every minute, according to the old saying. And there's hundreds, if not thousands, of times in history where this has happened. I mean, I'm now getting to be middle-aged. I'm 41, but I've seen this since I was working on Wall Street when I was 16. 25 years. There's just it never ends. There's always somebody who says, well, what if? If you guys want a really good story in market history, I would look at a company called Piggly Wiggly. No joke. And this is a company that was like the original GameStop. Piggly Wiggly was a was a kind of a legendary company. It was a supermarket, and they tried to sort of manipulate their stock by making it go up, and it was a failure, as you can imagine. But it was something that was like, really historic, sort of market squeeze, if you will. And it failed, but it was ultimately kind of an interesting, market sort of manipulation story. And there are many others. There's a great book by John Steele Gordon called "The History of Wall Street," more or less. Let me see if I get the exact title for you.
There's also the Volkswagen squeeze. And I also think, Lady Trader, that what we see now, like there's when you see a stock price completely, separate from fundamentals, when you see it go up to $300-$400, like the ones that come in after, right, that didn't catch it, think it's going to happen again, and these diamond hand, these ones that will hold it all the way down to zero. You'll hear like zero to hero, fundamentals don't matter. Like I'm with Martin, like the market is eventually always going to correct into the fundamentals of a stock, but there's just a whole new, I mean, for the last 3 years, right? We've been hearing the same story over and over and over again, right? Like, if it happened once, it can happen again, and they're going to hold until they see it happen again, whether it doesn't, and no matter what their losses are. I mean, there are people holding bankrupt companies into cancellation and believe that it's coming back. So I mean, illusion is everywhere.
So the book is called The Great Game by John Steele Gordon. Wonderful history of Wall Street. And then there's another book called Business Adventures. This is a book that Warren Buffett and Bill Gates say they like quite a bit. And it talks about the Piggly Wiggly squeeze. So back in the 20s, there was an attempt to corner stocks. And this is partially what led to the creation of the SEC. And there were a number of people that tried to buy up the float of different companies and try to goose the stock and gun the stock to the point where they could force them to sort of go up and squeeze everyone. But there was a lot of these ended up in tears, because without an actual business at the end of the day, all of them were sort of doomed to collapse. But anyway, let's take some more questions. I'm sure some of you are really pissed off. I'd love to hear from you.
Hi, Martin.
Hello.
I wanted to come up and talk about the news today about GME and Keith Gill potentially getting kicked off of E-Trade for market manipulation. I just thought it was really interesting. Previously they gave him a gag order when Congress subpoenaed him and everything, and I just thought it was interesting that now he knew better than to say anything at all, and instead was just going to post memes, post image image edits, and like visuals superimposed over movie scenes, and like this is somehow now market manipulation. But it's just kind of interesting because it's not words, it's images now that are, or maybe also him posting his P&L and posting his open positions.
Well, there's nothing wrong with doing any of that. I think that the market manipulation laws that I wrote a little bit about earlier, they do prohibit taking advantage, causing and then taking advantage of a rapid stock price increase. So you can't really pump a stock and then sell it and then tell everyone, especially if you don't tell everyone, hey, I sold all the stock and, sorry guys, you're the ones who bought it from me. That's basically manipulation, right? I mean, that's, I think, would be challenged. If Keith,
like if he had sold the top, basically, like if he had dumped all those options when it peaked, like the day
and
the
maybe
moment
he did today, maybe he's
he didn't because he knew that would be way too obvious. He actually held on to him, which actually might be a problem for him because he overpaid the premium, so he paid $5.67.
Maybe the trade works out. Maybe it doesn't.
I don't know that it's going to. Not now. It may have if he sold today on the pump, but
this isn't the first time in history where a trader has made a big trade. There are a lot of people that have done this over the years. Some made it out okay. Some lost all their money. Some made a huge fortune and became an even bigger legend. But it's not that interesting at the end of the day. If you go to Wall Street, if you've ever worked on a trading desk like at UBS or JP Morgan or something like that, every day there's some customer that places a bet every second. And sometimes they place a big bet, and sometimes they place a small bet, and sometimes they make a fortune, sometimes they lose a fortune.
Right, but only a few times have like the rules been changed because of people placing bets. Right? I think in the case of Piggly Wiggly, didn't they have to change?
Yeah, they did change the law for Piggly Wiggly. For E-Trade, they're a bank that's allowed to. So E-Trade kicked me out after I bought 75% of a stock and refused to lend the stock out for borrowing. So I know a little bit about this. The stock went from 1 to 40, and I made $60 million in a day or two. But E-Trade closed my account, which I was very surprised about. But they also knew, interestingly, that I'd be arrested 2 weeks later, because they got paid a visit by the FBI. And the FBI was like, investigating. They wanted records and this and that. And if you're the CEO of E-Trade, you're sitting there saying, I don't want this guy's account. It's going to get frozen. I'm going to have to do all this shit. I just give him his account back, right? And I don't know what's happening with Keith. I'm not trying to insinuate anything. But I think that if you're E-Trade, same as me, right? So I had this exact experience with E-Trade. You're sort of better off without this customer. What does one customer mean to you as E-Trade? Nothing. It's $8 to trade, right? Like, it's not like they get anything. They get some margin from balances and things like that, but it really is not, that meaningful to have this customer. And if they could do this quietly, they immediately would. It's a no-brainer. But the problem with Keith is, if they shut his account down, do thousands of people leave and go to Robinhood or something? Now apparently these guys don't like Robinhood either, so there's nowhere left to go. But the reality is the stock market's really regulated. It's really difficult to exist as sort of a rule breaker. The banks don't like rule breakers. The rule breakers end up costing them huge amounts of money in settlements and things like that. So GameStop feels to most people like an extraordinary situation where someone's almost like hacking the stock market. And that's great, hack away. But for me, I'd rather not see people lose their shirt. Again, I tried this with AMC. Over 2 decades, I posted short theses on stocks where I warned people about stocks. Every time it's the same thing. Every time. Wah, wah, wah. You're wrong. You suck, Martin. This stock's going to the moon. You're an idiot. I'm brand new to investing, but you're the idiot. And I have $5,000. I know you're managing a lot more, but you're wrong. And then 6 weeks later, the people say, "Oh, it's your fault that the stock went down," or whatever it is. And
Yeah, I lost my shirt on the first go around, so I'm here a lot smarter the second time.
Well, and I think that didn't they just put out didn't the SEC just make a thing ruling about brokerages, and like it's risky for them. Like, if it is found to be market manipulation, then someone can go, well, why did E-Trade allow him to do this? And
yeah, and
then
I'm
the
not a big fan of
liability
this.
falls.
Yeah, I'm not a big fan of this stuff. I think traders should be able to do whatever the fuck they want.
Yeah, I do too. But yeah,
But the reality is, if you're E-Trade and you're running E-Trade, you got to think about it. I'm not the CEO of E-Trade, but if I
no, you got to
was,
think about liability.
yeah, I'd be sitting there thinking, okay, I don't want my legal department involved in this for the next 3 years. Easier for this guy to move to Schwab, just kick him out. And, it's probably better for business. Now, if you stand on principle and you say, no, our traders, and we're going to protect them, and they should do whatever they want, well, that bank is going to take a little more risk, and maybe they get the benefit from it, maybe they won't, but E-Trade's made their decision. So,
maybe this is the future avenue of the zombie stock that GameStop is, that they should just be an options market for all these squeeze pumpers. That would be, one way for them to make revenue one day.
But the thing is, like, this is all ZERP phenomenon. Like, this goes away in a depression or recession. Like, nobody gives a fuck about GameStop in that market. GameStop goes to 3, where it was before.
Yeah, very real.
Yeah, remember?
Well, it was going to 0. It was on its way to 0, right? That's why it was over 100% shorted. It was just like every other retail dead zombie that was just going to hell.
You can't change those dynamics, right? No amount of short squeezing, no amount of willingness to lose and waste money. As my friend Andrew Tate and Dave Portnoy, who's not a friend, but I don't know him, but Andrew and Portnoy have said, we're going to throw a couple million into this or whatever. And it's like, cool, but it's not a good investment. You can invest in a fund, a venture capital fund, a private equity fund, a hedge fund that could, I'm not saying it will, but could make you 20% a year for the next 10 years. I worked at a hedge fund like that. It was Jim Cramer's hedge fund. Made a lot of people very rich. You could buy a startup, stock in a startup that could go up 10x, or you could buy this company, which has no great prospects. So I don't know. To me,
but as long as they can do shelf offerings or like at the market offerings, they basically are like zombies, right? Like, they can't die as long as these shareholders are willing to subsidize these losses.
I said, in the ZERP world, the propensity to sell increases because you use these as a source of funds. Everyone's a diamond-handed ape until they need the money. When they need the money, it's over.
Martin, I just listened to someone who is living in their car because they refuse to sell GME. So I mean, I think, like, in theory it works, but there are some people who are truly just
Yeah, no, there are, but that's the minority. And at some point, the people in your household, if you have any sympathy or empathy for them, if you're the income earner, you're going to look around and say, gee, should I sell the GameStop so Jimmy can get a new book bag to go to school? Or do I diamond hand this? And I think that, in good times, it's an easy decision. In bad times, which is usually when these bubbles pop, the stock market, the dot-com bubble, my first bubble, 99, it popped when economic activity went down. When economic activity is going up, there's no marginal seller. Everyone's winning. Once economic activity goes down, somebody says, sheesh, I got a lot of money in this Intel. I got a lot of money in this Microsoft. And I just got laid off. Maybe I should lower my exposure. And then the whole thing's a big domino effect. And before you know it, there's a huge crash. And ultimately, the stocks that are most overvalued drop the most. And, stuff like GameStop will be back to $2 or $3 where it came from. And, I don't know what'll happen to RoaringKitty, but this isn't a smart investment. And again, the only way out is if the management of GameStop can somehow make this amazing kind of turnaround. If you look at the cash flow for the last 3 years, on average, losing around $150 million a year, they need to find a business that will make hundreds of millions of dollars a year, and that will only make GameStop be fairly valued, let alone undervalued. So it's very hard to create new businesses that make hundreds of millions of dollars a year. Very hard. Even company like OpenAI or Anthropic, the best sort of startups of the last few years, it's 1 out of a million. And it's not like Ryan Cohen has this established track record of doing that. He tried to add an NFT business line. Even the biggest NFT makers don't have any revenue. So really abysmal stuff. Durag?
Wait, what? Durag?
Okay, you, average crypto?
What's up? What's up, Marty? How you doing, man? I'm curious, like, is this a bad quest for Keith right now, man? Like, the fact that he has the ability to push a stock like he does is like just so impressive. But I think we were in a different time period. The last time we had the GME phenomenon, and like the couple of things we have to remember right now is like, number one, there's not as much liquidity in the market as there was in 2020. Like you had hundreds of millions of people just sitting at home, like with checks being written to them by the government.
Sure.
Right. And then like people had the free time to just like, they didn't have anything better to do. So,
well, the company was also pitching a turnaround, and the turnaround hasn't happened.
Right. And it's just like, man, I love the story so much. Like, I hate to see him like I don't know that you can damage a story because it was so great, but like, I want to. I just.
I mean, look at Michael Burry. This is another guy that people over-index to. Basically one of thousands of hedge fund managers, and arguably very much in the middle of the pack of hedge fund managers, not in the far right. 3 Sigma kind of returners. Like he's like a 0 Sigma returner, and because there's a film about him, people care about him. And the reality is, the guy, is not any particularly more exceptional investor than any other hedge fund manager. And, there's just a lot of interest in something that's on TV or something your friend tells you about. And that drives, this, kind of overvaluing that, again, returns to norm when capital flows return to norm.
Yeah, and Burry, like, everyone wants to see him do his greatest hits again. They're like, oh, Burry's going to go short.
Right.
But, like, when Michael Burry goes long on Toyota, like, that's not a cult phenomena. Right. Or like when he just starts doing normal fund manager things, now it's not interesting anymore, but only when he makes these gigantic loss leader positions.
Well, it's funny you say that, because there's often this temptation on Wall Street when you do make a big bet, like you're talking about, that you try to do it again. And Paulson was a good example of a guy that never, Paulson, one fellow I met, Phil Falcone, who had, these were 2 of the biggest subprime winners, and they never made $1 again. And I don't know if RoaringKitty will make a great trade here. I don't know if he'll break even. I don't know if he'll lose everything. I have no clue. Why? Because markets are unpredictable. All I can tell you is probabilistically this is a bad investment. That doesn't mean it's for sure a bad investment. If I knew that for sure, I could make free money all the time. It doesn't work that way. I look at companies. I've looked at companies my whole life, and I've said, okay, well, how much would I pay if somebody came to me and said, Martin, I want to sell you the whole company, GameStop. I've done this many times for a living. I size it up. It's okay. Well, what would I buy this for? Well, outside of the cash, which how much a dollar of cash is worth, is exactly $1, and they have something like 2 billion of it, so it's worth at least that. And then for the rest of the business, this declining retail business, I don't know what would I pay. It's hard to say. I mean, it just loses money. Why would I pay anything? Maybe feeling generous, I'll pay 1 billion, something like that. That's a really low stock price compared to where it's at, right? So how many shares outstanding does the company have? 305 million. So 3 billion is a $10 stock price. So a lot less than what it's trading at. And
yeah, I think that's even overvalued, to tell you the truth. I mean,
yeah, probably
just by book value.
Yeah, no, probably. So it's why would I care if I oh wait, I'm just trying to look at their cash position. Yeah, I see 1.2 billion there, and then I guess they probably raised, right? So their shares outstanding are more than they were before. So regardless, it's not pretty. Maybe it's less than $10, like you said. It's more like $8. But regardless, what's the upside? Somehow they get retail right. If that's the case, it's maybe it goes to 15 or 20, but that's nothing to get excited about. You're just praying for some miracle short squeeze, which is ridiculous because everyone that prays for that is going to get out when the price goes up. We saw this movie before. Stock price crashed.
There is a path here where he could have a similar outcome to last time. If he would pivot everybody's attention and say, hey, like they can halt the stock on the NYSE, like they can.
These are all nonsense games. Like at the end of the day, like people don't invest for these nonsense games. They invest because or at least you should invest because you want to buy a stock that doesn't require you to time it perfectly, doesn't require you to have your finger on the trigger the second it gets halted and all this nonsense.
Well,
like,
they do here. He could just have them like he could just say, I'm going to buy the GME coin, right, and like pump the shit out of that.
Yeah, all this ends in
I don't
tears,
think he can even make a statement with words because he will probably get sued or even maybe arrested for it.
Oh, he
like
probably
there's a reason why he can only make these statements with memes and images.
Either way, I mean,
and that's hard to prove, right? That's hard to put things like in a definitive statement through this. But I mean, I think that the SEC and regulators are still kind of feeling their way through the effects of social media on the stock market. So I think there's more to come on that.
There are a lot of people out there who are much richer and much more talented, and they share their investment theories, and the stocks don't change.
But it's interesting that the cult stocks are never the profitable ones. Like there's no cult stock around Novo Nordisk, or I mean maybe the Nvidia is kind of a cult stock, but you got to be pretty rich to be.
Yeah, I know exactly what you mean. I mean, Berkshire, these are just real businesses. When stocks are cult stocks because there's nothing else to them. You need the cult to be there. Anyway, let's get some more people in. Pulse, does anybody else have Big? Did you want to say something?
Oh, no, I'm going to step down, but thanks for having me up here.
No, thank you. Pulse or Brian, maybe? Trying to get through everyone. One of you guys needs to...
You can drop me if you need to, Martin, too.
That's fine. One of you guys needs to start talking, though. Brian or Pulse. All right.
Hey, Martin.
Hey.
I guess one question I have for you is, you seem to be a bit of a contrarian, and some of my mentors, and I guess I kind of find that myself too. At times you can I noticed that I just kind of call everything like, oh, that's just hype or gay or retarded, whatever. Sorry to speak crass,
No,
but
it's all right. Yeah.
how do you at some point you got to start playing the game. I mean, not with GameStop, but just I guess with certain things. Like when do you decide, like, okay, I'm gonna, not call this inflated or, you know, pointless or whatever, and like actually, I don't know, just like take it seriously. I don't know if I phrased that well, but just
Yeah, I
to
mean,
abandon the contrarian mind.
I like contrarianism, right? And that's what this is. That's why a lot of people are here, because I'm telling the crowd that they're wrong, right? I'm being
Yeah,
the contrarian. So
you just get lonely after a while. I feel like.
Yeah, I mean, sometimes I'm with the crowd too, right? I
Yeah.
mean, it all depends. I mean, I think what's important is you stay true to yourself and your principles. And my principles are, when I buy something, I really want it to be a valuable company that's producing a lot of cash flow. I studied Warren Buffett my whole life. I want to see the cash flow growing. I want to see a smart management team. I don't want to see, a shit show. So GameStop's a shit show.
Right. It's just like, I guess the hype is so, real with it, and obviously real money's being made. I mean, I've
Yeah,
got
hype
no
goes,
dog in the fight. Bitcoin's kind of the same way.
Yeah, hype is important. I think you have to think about it. But I also think that's why you size your investments accordingly. Like, I
Right.
think a lot of people from the retail world, there's one position size for them, which is all in. That's not how professionals invest. Professionals diversify. So if you were to short GameStop, for example, maybe you'll have 1% of your money in it. Now that's dangerous, of course. You might see a short squeeze. There has to be a price that you're willing to get out, perhaps a stop loss. Maybe after the stop loss, you can think about getting back in. It's not easy. Nobody said it would be. The nice thing about shorting hype stocks is they have a lot to fall. The not so nice thing about shorting
Yeah.
hype stocks is that they have a lot of momentum. So one of my friends,
Right.
one of the best traders I know, he loves to short hype stocks after they fall. Now that actually would have not worked in this case to some extent. GameStop pumped up recently, went down a lot, and now it's going back up a lot. So, perhaps that's not the best strategy. Some people like to average up. That seems like a really scary strategy. Try to time the top perfectly or average into the top. That's obviously very risky. So, there's no easy way to win in the stock market on either side, long or short. The only thing that you have to figure out is what works for me over the long run. And for me, what seems to have worked is I buy good companies at good prices. And GameStop's not a good company and it's not a good price. And, Nvidia, for example, is a great company, but I'm not so sure about the price. At that price, it's, a little pricey. Great company, obviously, making great stuff. GameStop's not a good company, and no retailer is practically. And it's not a good price. Like, I'll buy a bad company if the price is really, really good, like giving it away. I've done that many times, but I can't buy a bad company at a bad price. That's like the worst possible thing to do. And
Yeah, you get nothing.
well, even if you think that you can get the timing of some momentum right, that's what a trader's job is. But most of the people interested in GameStop are not interested in trading. They're kind of interested in following this cult into to the end, one way or the other. And that's really, I just suggest people, like, the only allegiance you have to anything is your profit and loss. Like, your job is to make your trading account as big as possible, lady.
Do you think there's like a community part of like this whole
Yeah,
meme stock thing, like you invest, now you're part of the
and I
story?
appreciate it, Brian. I have to move on, but yeah, no, there is a major part of community to that. I think Amy knows that really well. Unfortunately, Amy's been beat up by some of these people over the top, way out of line, and for telling her opinion, which is unfair. I've seen it. I'm a little bit of a braver person. No offense, Amy. Amy, you're very brave. But I'm somebody that really doesn't give a fuck, and is willing to go to the mat with anybody, anywhere, anytime. And nobody can cross the line with me. But irrespective, I think that there is a cult here, and getting companionship in buying a bad stock isn't the best way to get companionship. Get a dog. You can get a cat. I have a nice cat here named Nibbles. Whenever I'm lonely, I scratch her neck and she purrs. It's fantastic. that's a great way to get some companionship. I should probably try Tinder as well. But ultimately, you know, you don't find it in gee, let's form a club to make this terrible investment. You know, that doesn't seem that great.
It's trauma bonding, right? Like
Yeah.
that's what they're all like, all bound together by this kind of traumatic thing that they've all gone through with buying the top of ridiculously priced stocks and losing all their money. So I mean, they all just sit together and, you know,
All right.
it makes them feel better about it.
Let's hear from Always Sad, since this is, I think, a GameStop fan. And lady, if you want to interject, go ahead.
I was just going to say, Martin, just had a comment about what you said about being a contrarian, right? When we look at the data, 95% of the traders actually fail. They lose money, right? So it actually does make sense to kind of take a step back and say, okay, if everybody's going in this direction, maybe I need to rethink my strategy, maybe look at the other way and see, what else is out there. I think that's a great reminder.
It's hard to do when you get blinded by greed. You know, when your position's up a lot, you sit there and say, wow, I'm getting rich. This is great. The last thing that you want to do is sell because things are going so great. And the vice versa, when your position's getting destroyed, you're sitting there miserable and saying, oh man, I'm getting destroyed. There's just no way I can invest more in this thing. And sometimes that's the right thing to do. But anyway, there's no simple answer, but always I want to hear from you.
I appreciate you for the opportunity.
Sure.
I've done a lot of research, so if you'll allow me a minute or so, I think I can put a perspective on why the investors, not the traders, like this situation. Because there's different reasons to invest, right? We all have different risk tolerances. There are different strategies. There's different reasons to like different stocks. But when we look at what Burry, unfortunately, Long Beach Mortgage, apparently all of their offerings and all of their CDOs and mortgage-backed securities, they're all still alive. Washington Mutual was their ownership. Goldman Sachs bought them 2 days before 08. And unfortunately, Burry invested $5+ billion on the day of the market crash 08. So Goldman Sachs is still very, very on the hook for what Michael Burry showed in 08. Now, when we look at the original IPO positions for GameStop, unfortunately, we actually have in our predecessor, EB Games, Prudential Securities, which turned into Wachovia, which turned into Washington Mutual, which got bought, and the other underwriter was Salomon Smith Barney. On the side of GameStop, 2001, we had an offering called GSTP. The building blew up, and directly after that, we had an offering called GME. And nobody really understands that the difference in those two offerings is Salomon Smith Barney took 3 million shares for $18 and cashed those fuckers out. They also bought the other two underwriters for that, and then they merged into Citigroup.
Well, this is great Wall Street history, but maybe we can cut to the chase.
Exactly. Salomon was litigated for that IPO fraud. Citigroup was litigated for the IPO fraud.
What does this have to do with GameStop?
Because these are all the underwriters of GameStop, and what they are
like a million years ago. They have nothing to do with the company now.
The thing that Burry was looking at was never finished. Goldman Sachs is on the hook for it, and these are all the people
You sound like somebody that probably believes in conspiracy theories.
No, I have all the filings and facts to show you. So
well, these are all facts, but they're irrelevant facts.
And you would like to look at this cited and searched research, I have every source available to prove everything I just said to say
GameStop. It doesn't have nothing to do with GameStop.
It's the epicenter of how they covered 2008. We are on the inverse of that swap. That 2008.
Okay, so let's try to find some common ground.
I can show you.
Okay, be quiet for a second.
Instrument possible.
All right. Yeah, be quiet. Yeah. All right, listen, you sound crazy. Most people on Wall Street, right? We buy shares of companies. Maybe you're trolling me. I don't know. But when we buy shares of companies, we try to determine if their stock price will rise or fall based on the prospects of the company, not based on their underwriters from 20 years ago. I took my company public through a bank called Jefferies. Jefferies sold, I don't even remember at this point how many millions of shares to the public. I gave my friend Vivek Ramaswamy a big allocation of that, and the stock did great. and we never did business with Jefferies again. We did business with another bank called Barclays. These underwriters have absolutely nothing to do with anything. They get paid. Some people call them disparagingly. They say an investment banker is like a whorehouse. They get paid 7%, sometimes less, 3%. They move on. They place your shares. They find a bunch of hedge funds. They find you a bunch of mutual funds. You fly around the country. You do a road show. I still remember going to Boston to close our biggest investor, Putnam. They put in for the entire IPO. Jefferies was sitting there demanding that we raise the amount that we raised. We had demand for 300 million. We placed 40 million. They wanted me to raise it to 60 or 80 because they get 7% on however much you raise. So of course they want more. And I told Jefferies to piss off. That got Jefferies mad. They didn't want to do business with me again. I went to other banks and placed converts and things like that. So what does that have to do with anything? Quiet down. I didn't say you could speak again.
I didn't.
Yeah, shut up.
I didn't have permission. I put something.
Yeah. Quiet down. Before I remove your dumbass.
Bro, because I'm not asking your permission. I'm speaking.
Okay. Thanks for coming. So underwriters have nothing to do with companies. They barely understand the company. They're literally just there to sell to their CRM. They don't do very much. So you sound like you're a nut job. Which I think is instructive. That maybe that represents the average GameStop investor, conspiracy theorist. I don't know. Who's next? Saul?
What's going on, Martin? How you doing, brother?
Was he as crazy as I thought he was, or am I missing something? Was I impatient?
I think just maybe abstracted away a little too much. I mean, I like to let people see if they can land their plane. I mean, I like big round points, bro. Sometimes like everything is.
He was talking about the underwriter from 15 or 20 years ago. Like what? How could they?
Yeah, I mean, right now this is just basically. I feel like Mania at its best, right? Like, I mean, we see this in so many different markets, and people are looking for a hero.
There's a meme stock called Mother that rapper Iggy Azalea put out, and the meme token is worth $100 million. So yeah, there's a lot of loose money around in the world right now.
Yeah, and I think people are really, working to be self-advantageous for maybe once. I feel like it's a lot of people's first time they've ever tried to like take a villain arc and be good for them to themselves, right?
Well,
like it's like that fuck it moment for them.
It's a lot of people's first time investing. I mean, I think, and thanks for coming. I just maybe wanted to get Dilly or Kelsey. Kelsey, the famous fellow, is here. How are you?
Hey, quick question. I've only caught a little of the space, so sorry if I missed something. I think you're probably giving people what you would consider common sense advice. I've never, a lot of this seems to be closer to gambling. I look at sports betting. I look at the average person who goes to work. They make like just enough, but they'll never be like the people we celebrate in America, right? Like I have 100 million. I do whatever I want. I can pay people to do whatever I want. And the fastest way that most people calculate to getting there is literally to gamble, right? Like if you have all the time in the world, if you have a ton of cash, you can do strategic investments, right? Like you have money you don't need to spend immediately to pay rent or whatever. And you can do all of this stuff like invest for the long term, 2 years, etc. But I wanted to get your thoughts on the gambling aspect of all of this, right? So when you play the lottery, people know the odds are terrible, but they do it anyway because every billboard they pass, you can make $1 billion doing nothing other than stopping at a gas station and buying a ticket. And then you too can have $1 billion and live like the people we celebrate. So when it comes to GameStop in general, most people don't understand the market. They don't understand if the CEO is just going to quit tomorrow. And all of a sudden, a great stock becomes a terrible stock. And so when they look at GameStop, I guess they're telling people, hey, you're an idiot for buying this thing. How many people do you think know that they're just gambling? They're not going to do a good job anyway. And this hype train looks like this is their best chance at getting lucky. So they put their money into the pot because it's easier than ever to just buy one of these stocks. How much do you attribute to that versus them just being, I guess, in your title, retarded?
Oh yeah, I mean, and when I say retarded, I definitely am not trying to dig at anyone personally.
Thank you.
So what I think is going on is, I'd say most of it is, maybe it's, I can't quantify it, right? Like some percentage of it is wishful thinking, and some percentage of it is, being new to investing. Like the first caller we had sounded really new to investing. He said he was in his 20s. He thought there was an Illuminati conspiracy to control the stock market. And, he just didn't sound very sophisticated, which you don't have to be sophisticated to be a good investor. But I think over time, as you trade, you learn things, you invest, you learn things, and you learn the ropes. And, somebody tells you, or you look up what short selling is, and you look up financial statements, and you kind of go on your own journey to learning things. I think but you hit it on the head, and there's a lot of symptoms of this behavior. A great example is Dogecoin and Shiba. These are two crypto tokens that are worth in aggregate around $20 billion, and neither represent productive assets. They're sort of meme tokens, and they've lasted kind of the test of time. That time being still relatively short period of time, like 10 years, but they've lasted the test of time. And I think that one of the funny things about this is one of those tokens especially has many leading zeros. So the price of the token is something like, a 10,000th of a cent. And there is this fallacy. And in fact, funny enough, I'd meet lots of people when I did my involuntary relocation who had Dogecoin and Shiba, because they said to me, Martin, well, if this goes to just 1 penny, I'm going to be worth, $10 million. And because I own, I don't know, 10 billion shares of, Dogecoin or something like that. And, it seems like it's possible that the stock can go to that price. And if it does, then I'm rich. And that is sort of the mix of wishful thinking and inability to sort of understand the bigger thing, which is like, how can this Dogecoin be worth more than, say, all the gold in the world? Or how can GameStop be worth more than Microsoft or something like that? That's really what it would take for you to be rich on GameStop. Maybe $1,000 can become $3 million. That'd be amazing. Unfortunately, it's not that easy. And I do think that a lot of it is wishful thinking and ZERP type of stuff. When unemployment's 3%, people can do that. When unemployment's 12%, you're lucky to put the food on the table, let alone gamble with GameStop or Shiba or Dogecoin. My good friend Rob Kelsey did it. I hope I covered that. And I've seen a lot of your stuff over the years, and thank you for coming.
Can I ask a follow up?
Of course.
I guess going forward, right? It reminds me of like the movie Idiocracy, right? It's like people know you can't grow crops with Gatorade, but they tried it anyway.
It
And
was a
over time,
documentary. Idiocracy
yeah,
was a documentary. I
yeah,
agree.
and it feels like as these, like for example, I remember when like you could never bet on sports. Now it's like promoted by all of these major
Right.
sports outlets. Like everyone should be gambling on sports. Like it's just the norm now. Cross state lines, lots of people are making money one way or another. And it seems like gambling is a big part of our society, GDP. I mean, even from a tax revenue standpoint, getting more people to gamble in any fashion, whether it's the stock market, whether it's sports, whether it's with your career, anything seems to be the fastest way to move money around. Do you think going forward, people, I get you, like, hey, investing should be a skill, should require studying, but all of these apps, all of these things that make it super easy for you to bet up or down, and some people do win, this seems to work. I'm not saying it's right because I'm pretty much against this line of thinking, but has the culture and the trend headed towards this is just the default thing we want people to do, and we can all piece off a piece in the middle as long as they gamble on anything, stocks, Bitcoin, will their grass grow? Is this like the new thing for making money?
It's really interesting. I think that somebody recently talked about this thing. Maybe it was one of these guys like Grant Cardone or one of these people that I typically don't care for, but they put out this really fascinating study on the increase of gambling in society, and meme coins are a really good example. There's billions of dollars of meme coins traded every day. It takes less than a penny to create a meme coin, and you get it going, and you know that the token's going to get rugged at some point, which means that the developer is going to basically take all of the liquidity from the token, and you do it anyway because some of these go up 100x, and you hope to get out of the musical chairs at the right time. And you see other people's stories about it, etc. Now, in terms of greater society, I do think it's dangerous. I come from a poor country called Albania. In Albania, the whole economy nearly crashed due to like Ponzi schemes and chain letter schemes. At one point, 25% of the country was invested in one Ponzi scheme. So it's possible. Anything's possible. Herd mentality can create crazy things, and we saw that once with GameStop, where it went to hundreds of dollars a share, came crashing down. Now it's back, or it's starting to come back. Maybe it'll go back to hundreds of dollars a share. It was there before, so why not? Can it go back again? And the gambling
Hell
mentality,
yeah.
the gambling mentality is infectious, and it's why Vegas.
Is it gambling though, Martin?
Well, we'll talk about it in a second, Dilly. I think that the chance to make lots of money, which some people would call gambling, is a little infectious, and it's why it tends to be regulated. It speaks to a part of our mind that is the same part of our mind that gets lit up when we do drugs. It's the same part of the mind that gets lit up when a drug addict wants to take drugs. I'm not kidding. I mean, this is something I studied for a long time. Dopamine is literally the risk molecule, and gambling addicts and riskaholics and cocaine and alcohol and other drugs, people who are addicted to those, inhibiting dopamine will lower their propensity to use the drugs. Their risk, the benefit they get from taking this risk or satisfying this addiction is stymied. So I think that there's a reason that the government's tried to regulate this stuff over the years. Now, as a libertarian, I would say that screw that, let people do what they want. Other people on the far other side of that point would say, no, we have to protect people lest they get addicted to drugs. Imagine if drugs were legal in the country, everyone would be on heroin. Perhaps, perhaps not. I don't know. I'm not a sociologist or a politician, but I do think that we're talking about a lot of the same behavior. It is easy to lose all of your money in the stock market. It is easy to lose all of your money in crypto. There's a lot of reasons that in the 20s, people swore off stocks forever. The Great Depression caused that generation to say, I'm never investing again. And it took, in fact, the dot-com bubble had a lot of the same dynamics, where you had cab drivers telling you about their favorite stocks, some of them becoming millionaires, losing all their money, and then rapidly kind of deciding to never touch markets again. And even the last crypto bubble had people swearing off crypto forever. And there's still a new crypto bubble. So I don't know. Rob's a very smart guy here. Love to hear what Rob thinks if he wants to say something.
Hi guys. Yeah. So sorry, I Martin, good to chat. I know it's been a while, but I joined super late, so I don't know. I apologize in advance if I've like missed a big piece of this. I kind of wanted to. I didn't even know that this was going on really until the last, I guess, day or two, when I saw some stuff on Twitter, X, whatever. But I think it's really easy for call it loosely like sophisticated capital to look at this thing and go, of course this is worthless, right? Like it's trading at a 9+ billion market cap at the moment. We've seen this thing play out before. But my question is, and I guess full disclosure, I did short, and I actually. It was profoundly expensive, as you might imagine. Finding a locate, even at the time in 2021, was tough. But even then, you had to stomach the borrow costs to short it, which I did, and I actually did it on Twitch. I don't know if we ever had that conversation.
No, I've seen it
back in 2021.
I remember.
Did you see
I
that?
remember. Oh yeah.
Yeah, so I did it, and it ended up obviously working out for me, but at the time, but I attributed much of that to, or I still attribute much of that to just, I was, I knew I was taking a big bet, and when you short a stock, your losses are theoretically uncapped, right? A stock can go to infinity, and if you're on the wrong side of that trade, then you are quite
Talk
fucked.
about gambling.
Yeah, no, right, correct. But I was again just kind of taking a bet that I thought at the time was a reasonable bet to take. It ended up panning out, and I don't remember exactly what the dollar amount was, but it was fine, and ended up being a good trade. With that in mind, it was profoundly uncharacteristic, and so it actually caused me kind of doing a postmortem on the thing, even though I did it very much like tongue in cheek and whatever. I did a kind of a postmortem on myself. I'm like, Jesus, like here I am looking, from a high level at the way that this has impacted so many people's kind of trading psychology, which anyone who is an active trader really, and not shouldn't just understand that trading psychology is a thing, but should actually study it, and kind of amass as many viewpoints on trading psychology as possible, because it is, if you want to trade actively, it's something that you absolutely need to understand. But it caused me to look at my own and go, wait a second, this mass hysteria, like I like being a contrarian. I think I jumped in when you guys were talking about contrarianism, and it's a fun thing, a good thing from time to time to be as a contrarian. You can generally make more money being a contrarian than you can being someone that is part of the herd. But I looked at the mass hysteria and I was like, okay, I mean, I understand fundamentally this thing is obviously not worth it. 10 cents on the dollar. There's this mass hysteria. I'm going to try and time it, right? But the reality was the trade ended up working out well for me, but it just as easily could have blown up in my face and cost me millions of dollars, right? And, so I vowed to myself that I was never going to do that twice. Here we are in a similar position, albeit, we're not quite at the levels that we
Let's
saw in
go.
2021.
Are you shorting?
No, I'm not.
Oh,
I'm not.
okay.
And there's a couple reasons why. But I want to talk. I mean, I want to ask a couple questions. And Martin, I'd love to kind of just have this conversation with you or anybody else who wants to talk about this, because there is an opportunity, right? The CFO of GME, and I'm going to fumble some of this because I can't remember all of the details. So please fill in the blanks, if I get
Larry's
something
tank.
wrong, please correct me. But they well, irrespective of who it was, they could have theoretically issued a bunch of shares, and basically paid off all of their debt with the amount of kind of inflow of basically the amount of buyers that were coming in. They could have basically issued enough stock to then immediately pay off their debt, and the company would be debt free. Right
I
now,
think that was
there's
AMC.
They are
GameStop.
debt free.
Yeah, GameStop doesn't have debt, but
We have no debt.
I think AMC was the
$2
debt.
billion
was that
Yeah,
AMC?
cash
yeah.
on hand.
Okay. Well, that's okay. Then, so it's a separate meme stock, irrespective. So I guess we can move on from that specifically. But my question is, like, what is the thing actually worth, right? It's not worth zero. So if we
Definitely
back out
not.
the fundamentals, like the inventory, that's easy to, obviously we can look at that. But like, what is the brand equity of AMC, or not AMC, of
Ooh.
GameStop actually worth? Like, because that seems like a reasonable place to start if we are going to start doing calculus on whether these trades are actually reasonable and
And
viable
I
to
think it was
make,
Kelsey's
right?
point. And Dilly, you've been waiting patiently, so I'm going to let you talk freely.
Patiently? Oh, I love you.
I'll let you talk freely in a second. But I think that's kind of what Kelsey was talking about, in a way that the average GameStop trader is not worried about what the company's worth. They're worried about the dream. One, the dream of making tons of money. That's satisfying enough. Or two,
Right.
that maybe they don't understand that stocks generally are not going to go up 100x or 1000x or 10,000x, and that there is no such thing as a mother of all short squeezes, and so forth and so
Bro,
forth.
we just like the stock. Like, we believe in the company. We
Well,
like the management.
though,
We like
But
the
to do what?
fundamentals.
well, go
We
ahead.
like the
Tell us
Right.
projected.
more. Tell us
Okay,
more.
well, let me tell you, Martin, it's been so long since we've talked, and it feels so good to be here with you right now. Like, I think the last time I talked to you, I asked you, like, what you've spent more money on in life, Wu-Tang or Poo-Tang. That was under my alt. It was, speaking of Wu-Tang, there's like some tinfoil. A lot of our tinfoil is like coming through now. But back to the fundamentals about GameStop. The company has no debt. We got cash on hand, and we got a lot of it. And like this company is transformed. We have flagship stores in Italy that they're coming out with. Our pro membership is expanding into Canada. We have the ability now, they're taking Pokemon cards, graded cards that you can trade in, and everybody likes cash, you know, like if you have like these cards laying around that are collector items, you can now bring them into GameStop, get fucking cash in your hand. And like that is such a viable like expansion for revenue for them. Not to mention with all the cash on hand this company has, they can easily sit with these tokens, these cards, collectibles that are going to accrue in value. Like
Okay.
they're now coming out with an
So,
entire
okay.
like expanded line of their branded accessories. We have a partnership with Palmer Lucky that just fucking dropped today, you guys. I mean, like, talk about big dick energy. I don't know. Like, I
Right.
think there's a lot that you guys are missing, not to mention.
Well, let me ask you this.
Yeah.
When do you think the company's revenue will go up?
Exactly.
I think we're on the brink of something right now.
Okay.
I really do. I really think we're on the brink of something. I mean, just
is there
imagine. Can we just imagine a second if like
that's my
RoaringKitty
job
this decided to exercise all his fucking calls? Have you like done the numbers?
But that's my job as an investor, is to imagine the
Oh, I
future.
know. Martin, I follow you. Like I follow you. Like
And
your commentary on the SBF like courtside commentary, that was just supreme work.
glad
Like
you
beautiful.
enjoyed it. So
Well,
Game.
let's address what you just said. Him exercising all of his calls. Currently, he doesn't have the cash, at
We'll
least
talk
from what
about
he's
that.
shown.
Let's
How
talk
do we
about
know
that.
that, Amy?
Let's talk about
Because
that
I'm
later.
saying from what he's shown, the cash that is in that account
But you guys realize he doesn't
is
have to
not
show
enough
us
to
anything.
exercise the
Okay.
calls.
And the
Let's
fact that he did, no, hold on a second. Let me just let me spread my wings 1 second. Like the
Okay.
fact that he came back and, you know, like he's doing all those memes and everyone's like, oh my God, look at what he's doing. He's like trying to like do a pump and dump. But did he sell today? No, he did a YOLO
Well,
update. And
that
if
would
you
have
guys
been
were
too
here,
obvious.
Amy, I'm sorry.
All right, guys. Let's take a step back, and I think there's a lot of different like themes, and it's sometimes useful for people who can't think that fast, like me, to separate these themes a little bit into different sections. So we have the first, which is, you know, this Game Boy that was released by Palmer. I actually a small, very tiny notice on this to potentially help out on it. Very cool product. I'm sure it'll be great for GameStop. But in general, I think like there's two pieces to this: the fundamentals and then the marketplace, right? So the fundamentals, I think, as Rob and I are trying to like drill down on as longtime investment analysts. Rob's got a long career in the investment world, so do I. I'm talking about professional investing for a living, risking tons of money, making tons of money. There's that. And I think that, the first question was just basically, when's this company going to break even? When's this company going to make money consistently? The last 3 years, total cash flow is negative 500 million. That's not good. I don't like to buy companies if they're losing money. Usually if they're making money, I try to do some ratios and different alternatives, compare them to other kinds of companies I could buy. I can buy a building, I could buy a bond, I can buy another stock. And I wouldn't buy something for 10 billion if it's not making money. At the very least, you can make me some money. I need some income. Doesn't have to be great. Like Palantir is trading at 100 times earnings. Well, at least they have earnings, and the revenue's growing. So why not buy a piece of Palantir instead of a piece of GameStop? So that's fundamental analysis. That's all well and good. Then you sort of talked about Keith Gill. I think that if you spend a lot of time trading and investing, you start to realize the emperors have no clothes. And like I said earlier, if you're on the trading desk with JP Morgan and your job is to trade for clients, you're going to see Steve Ballmer's family office, Bill Gates' family office, Steve Cohen, the biggest, best traders, Renaissance. All of these traders are all putting their trades in a bag. Some of them are really rich. Some of them aren't. Some of them have made more money than anybody. Some of them have made money eerily consistently, maybe illegally. Some of them are just doing their job and doing okay. But everyone has a bet. And there's nothing special about any of these people. I think that's kind of one of the key things that, needs to be remembered. There's no one with a Midas touch. Even Warren Buffett, when he buys a stock, the stocks don't go crazy. Sometimes they'll go up 1 or 2%. And that's the best investor who's ever lived, period. So, I'm happy to talk about the market dynamics. I just wanted to get my thoughts there out on the record. And on fundamentals, it's important too. Kelsey, raise your hand. Dilly, I want you to talk as much as you like, but I just ask you to be as focused as possible and be atomic, pick one thing that we can discuss and let's pick that apart slowly as opposed to just going through 100 different things.
Uh,
Yeah, go ahead. Kelsey or Dilly.
all right, can you hear me now? I think the muting.
Yeah.
Okay. So the fundamentals.
Yeah, the mute button has a leg.
Yeah, so when I saw the whole crypto movement, the first thing that I thought was, hey, timeline-wise, we got a lot of people to buy or put money into 401ks to buy stocks essentially at any price on the 1st and 15th, right? We told people, hey, invest for the long term. When you turn 65 or 100, you can tap into that. So save your money for 40 years. But all you got to do is buy stock at any price when you get your paycheck, right? Put it in your 401k. And then we get the ability to trade super quick. Hey, this stock may go up. I saw it on the news. There's a lot of price action being communicated. And within seconds, you can participate in that price action easier than actually buying lotto tickets at this point. And then we get to crypto. And crypto's look, skip the bullshit and the formalities. Let's just trade stuff. This is all you want to do. As long as everyone's playing by the rules, like you said, Martin, if you look at earning ratios, actually making money, maybe even paying a dividend. And if everyone's playing by those rules, it's yeah, all the technical analysis, all the fundamentals, it all makes sense as long as everyone. It's kind of like when people are fighting, doing karate, and then someone goes and starts grappling. It's hey, what are you doing? That's not allowed. But you lose the fight because they're no longer playing by the rules. So when I look at this GME stuff, it looks like people are saying, we don't care about the rules anymore. There is nothing stopping a stock from going up forever. If people wake up and every day they want to buy it at any price, right? It's $100 today. I think what's her name was saying, I like the stock. I'll pay $102. Nothing technically is stopping this from happening forever, other than logic. But if logic gets thrown away, can't this go on forever?
Yeah, so I think I touched on this earlier. I mean, I think that this is not new. People have tried to do this for literally hundreds of years. Some of the guys Rob hangs out with, I think he either knows or directly, or a lot of his crew down there, they know a family that tried to corner the silver market, and and they said, "What if we buy all the silver in the world?" And guess what? We have enough money to do it, and we're going to keep buying it. And at the end of the day, people who see us buy, they're going to buy as well, and we're just going to be rich forever together. Didn't work. They all went bankrupt. The Hunt family still has money, but the Hunt family, it sort of ended for them.
Does that change with cult-like mechanics where you have, let's say, 10 million people wanting to support something at the same time?
Yeah, it's interesting. So some people think of this as a DDoS. I know you're a legendary developer. I think some people kind of think of this like a distributed attack. The SEC has a rule. It was established in 1933. I may or may not have violated this rule once or twice, but it's called the wolfpacking rule. And the idea behind wolfpacking is the SEC wants you to disclose after you buy 5% of a company that you've bought 5% of a company, and you have 2 days to do it. And the reason is the market needs to be made transparent as that you're accumulating a big position. After you buy 10%, you actually have to disclose every single trade. And this is a little cumbersome paperwork wise, but it also is meant to kind of slow you down and put the market on alert that, hey, somebody's buying this big position, you should be aware. So in the past, I've tried to accumulate as much stock as I could in 48 hours so that I avoid the disclosure law for at least 48 hours. And in some cases, you can buy a ton of stock in that period of time. In this case, there is no such law because nobody knows each other. In the wolfpacking law, if you know the other guy buying the stock, if I bought 4% and Rob bought 4%, we'd be wolf packing because we wouldn't have to disclose theoretically, but really together we have 8%. We should disclose because we increased over 5%, even if individually we did not. So people sort of form these groups, whether they do it intentionally or unintentionally. This is the Wolfpack law. This doesn't apply if you don't know the other person. If we're all in a space and we buy 0.01%, as you're saying, we all 10,000 people do that, you have this distributed attack on the system. And again, if you look at the John Steele Gordon book I mentioned, called The Great Game, about the early start of Wall Street, really the entire history of Wall Street, there's nothing more inspiring to people than making infinite money at no risk. And people have tried every which way to do this. The hunt attack on silver was one example. I tried it with something called KBio in 2015. In some ways, Keith is trying it now. There have been many attempts to corner markets, force prices up, etc. None of them have seemed to work ever in the history of society. And I think there's one general reason, which is the marginal propensity to sell. As things go up, you look at your portfolio and say, gee, maybe I should lighten up. I didn't think that my net worth could be so high. I'm ready to sell 10%. And the thing is, the marginal seller dictates or buyer dictates the price of the stock. It doesn't matter if you only sell 1% of your position, because it is that marginal price that matters. It is not whether or not you're only selling a teensy weensy bit. It's whether or not you sell at all, even one share, because if you decide to sell that share at a certain price, that's the new last price. And all of the trading history prior to that, all of the buying, holding, and diamond handing doesn't matter. All it takes is two trades, or one trade. People can diamond hand for a decade, and then if one trade happens down 90%, that's the new price. It doesn't matter if you think it shouldn't be, but it just is. And it's kind of a funny part about markets. The last sale prevails, one, and two, the marginal buyer or seller sets the last price. So the diamond handing didn't work last time for a reason. AMC's diamond handing didn't work. It never works. It's literally never worked once. This is a new take on an old idea, but I think that the thing that stops it from working is that there is a marginal propensity to sell. If you got in early, you decide, you know what, I'm up a lot, it's time for me to sell. Now, your sell could be matched with a new buyer, but that new buyer's patience is going to wear thin. If he buys GameStop at 50 and out's at 25, he might say, oh man, I'm down bad. Once this thing goes back to 50, I'm a seller again. And you sort of go back to the same drawing board. And for whatever reason, the markets tend to clear. It's a great mechanism that works. And, I think that what most people who do this for a living have chosen to do is say, ignore all these market machinations. Fuck that. It's irrelevant. It's nonsense. Rob's right. Psychology is important. But if you just say, I'm going to put psychology out of my mind, I'm a long-term investor, I'm just going to sit here and buy stocks that I like at good prices that are good companies, that's sort of an approach that maybe isn't going to bring every dollar out of the system into your pocket, but it should be decent returns. But I want Dilly to talk because we've been overrepresented as the GameStop haters or questioners, and I want to make sure the GameStop.
No, it's always good to have like a decent bear thesis. I'm not saying yours is decent, but it's good to like try, right? And I don't know, man. I like the stock. Like I've been in this since 2020. In and out, like doing things with it. I don't know. Like the fact that the board buys their own shares, that just speaks of integrity to me. Like Ryan Cohen doesn't take a salary. And I'm sorry if my tism is like really off the charts tonight. I have been flying fucking high all day. And like, you're right, it's the dopamine, but man, it feels good. It really fucking feels good. Like he had 200,000 shares last time we saw his YOLO like updates. And for him to show up in super stock, he's been here all along with 5 million shares. Like, what the fuck, man? Like, it's crazy. And I mean, like, I don't think that anybody's like FOMOing because of like RoaringKitty's like fucking position. Maybe they are. That's probably not that smart. Um, I'm not a professional like you guys, but even I know that. Like, I think people need to have conviction in their trade and like, you know, do their own research. But
well, what
I
gives
just,
you?
I'm a gamer at heart. Like, I used to play Counter-Strike. Like, I fucking love GameStop. Like, as a kid, like
Okay, so
it's nostalgic. It's a feel-good
so
stuff.
maybe you could tell me what gives you confidence that the company's fortunes will change, because they've been fairly bad. I don't think anybody who can read would deny that the company lost money last year. We don't know if they'll make money or lose money this year. Every year we hope that our companies make more money than the year last, but over 3 years, GameStop's lost $500 million.
But they were cash flow
last
positive.
quarter. Yes,
Yeah.
but they lost money every other
No,
quarter.
for the entire year, the entire year
Yeah,
accumulated
the
into a
entire
cash
year.
flow positive when you actually check the entirety year report.
Sorry, I know how to read financial statements. what was
So do we.
Martin?
What was their cash flow from operations last year?
Martin, they went from negative $1.03 per earnings to trailing 12 months of 2 cents positive.
I'm talking about cash flow. I'm talking about cash flow.
Oh, they're profitable now, and
Okay.
their cash flow last week was $933 billion.
$900 billion.
Sorry, $933 million.
Okay, so fiscal
last
2023, what was cash flow? I'll help you out. Negative 204 million. Fiscal 22. Huh?
Are they on? Is their fiscal and calendar aligned?
No.
What is it?
So
are they March to March?
They are
that's
Feb,
fourth quarter.
They are Feb to Feb. So fiscal 2023, they lost money. Fiscal 2022, they made a small amount of money. Fiscal 21, they lost a lot of money. Net, they lost 500 million over the last 3 years.
Their trailing 12 month is up 2 cents a share.
So I can look at their last few quarters, but the last SEC filing is what I'm reading off of. It's the last 10K. And it was negative.
Look at the annual report for 23.
Yeah.
So not the trailing 12 months.
That is literally the trailing. That is literally the trailing 12 months. Is the last filed report. Is negative $203.7 million.
I'll screenshot it right here. What I got on
their Q1. Positive. I think they report their Q1 on June 11th. So it's got to be whatever that 10K is from Feb of this year has got to be the most recent.
Yeah, I definitely know how to read financial statements. As you guys know, I have classes on it on YouTube.
Look, I mean, these are all statements of fact, right?
Well,
like
we're disagreeing about them, but I think that.
No, I know that's my point.
The main point is,
it sounds like you're reading off the 10K.
Yeah, I am. I have it in front of me. They lost money, 203.7 million. That's cash flow. Last year before that, they made money. If the company is progressing, conditions would be improving, but revenue is going down. It's hard to be a retailer. As I said earlier, it's not enviable. Nobody wants to be a retailer.
Well, revenue and profitability are two entirely different things. Revenue can go down for a number of reasons.
I've been a publicly traded CEO. I'm very familiar with the idea.
Well,
it's in the nest right now, Martin, on their positive.
Irregardless of if you're familiar with it or not, I think it needs to be stated for maybe other people listening that profitability and revenue downscaling are two entirely different things.
Well, you generally
because
want your revenue.
The way that you put it makes it sound like it's not.
Well, when you run a business, you want your revenue to go up, right?
But I could sell $1 trillion of $100 bills for $90.
Yeah, but I mean,
Silicon Valley company.
I've never heard of somebody saying revenue going down is good.
It is if you're downscaling 100%. And trying to trim fat of things that might be costing you more in the long run.
Well, I guess, of course it's good to cut your costs, but it hasn't shown up in the earnings, right? The earnings have not gone up.
It's in the nest right now.
I am looking at the SEC filing. I don't know what you posted, but I'm looking at literally the 10K.
I'm looking at their earnings
That's just
at
a
2
straight up
cents
This is
EPS
so
positive.
much
report pulled
If
fun.
you
from
see their
Google.
P, go to any PE ratio right now, and it won't show negative. It'll show this positive,
I'm a financial
extremely high number.
I'm literally a financial statements expert. SEC.gov, 10K, negative 203.7 million.
Okay, so let's say that like so the revenue, whether it's shrinking, it's not shrinking, whatever, the cash flow shrinking, not shrinking, whatever. Like, what about like, okay, so if we treat this as a retailer, right? What does same store sales growth look like, or any of the same store metrics look like? If we go back to just like traditional retail fundamentals, do any of those stand out as like interesting, or are they all kind of singing the
They
same
don't
song?
disclose it anymore.
Okay. Well, generally, we would say that's a bit problematic, right?
Same
Um,
store sales are shrinking,
okay.
and
And
their e-commerce is launching, and they
okay, and
now
their
have
e-commerce is launching.
150. Yeah, the
So,
150
and now,
And they
if
are
brands.
someone has a better
expanding
understanding,
into
is this
different
a complete turnaround story, or is
areas of
this? I
Well,
mean,
when you look
profitability.
at the
is
product lineup,
because I'm
completely okay. So for one thing, you'd have to take into account their product lineup change. So they're no longer just a
okay.
video game retailer. And sure, you could get into the whole thing of the new cards. You can get into the debacle having to do with the
Dude,
NFT
that's huge.
flop. But the point is, one of their biggest
That's
changes is hardware. The hardware shakeup is massive for them
Okay.
because it opens them up to the complete PC gaming community that they haven't been able to touch for a while. So they're partnered with several different people when it comes to actually manufacturing and putting out their own branded hardware, RAM, keyboards, stuff like that, which is great. But on top of that, they're actually doing something very specifically that I like as a gamer, which they created a whole new company trademarked called CandyCon, and they're releasing some of the best hardware controllers on the market. I mean, these things are actually now cheaper than PlayStation 5 and brand new Xbox controllers, and they have better hardware equipment inside of them. So they're coming out with superior product at cheaper prices.
When do you think
And they're
when
doing this in various other sectors too.
when do you think
So
when do you think revenue goes up?
Yeah, go ahead.
I couldn't tell you
well,
for sure. I don't
probably
have a
soon
crystal
because
ball,
of
but
that.
I mean, a lot of these products and the change over the company entirely definitely doesn't, preach to the guidance that it's a failing, dying company. It preaches to the what the company is trying to do, which is to turn around. And I have complete faith personally, and that's why I invested in that they will be able to turn this ship and right it and kind of redesign the company and find a different path forward.
Yeah,
Also, to
they
your
definitely
point
need
about the
they
hardware,
definitely need a
like,
different path forward, right? I mean, the current business is
can I say this?
current business is a bit of a
Um,
disaster.
Sorry, Martin. Oh, sorry. But like the hardware is like such a big, huge market. Like I worked at Best Buy. I'm old, I'm 38. And when I worked at Best Buy, I sold computers and we had the best discount ever back in the day. It was 5% over wholesale. I bought a USB cord one time for 24 cents. Imagine all of those GameStop branded products they're now able to create on their own and sell that like with all of that margin, that's
Doesn't
huge.
Amazon do
That's
that?
fucking huge, man. Yeah, that's any company should be doing that now. We know that that's profitable. The fact that they're expanding into that, isn't that like
One of the
that's
big
going to create
differences
more
between
revenue?
their
That's what we're
Is
hardware,
it?
talking
one
I
about.
of the big
mean,
differences between GameStop's hardware that they've been putting out and somebody like Amazon's hardware is, and I've purchased from both. So speaking from experience, Amazon's hardware is shit. Like the crap that they sell you, it's all Chinese knockoff, horrible hardware switches. It's crap. But the hardware that GameStop has been pumping out, it's not crap. They buy from the same manufacturers that manufacture Corsair's crap. So I mean, it's actually good quality stuff that people buy pretty regularly and put into high-end
Well,
machines.
maybe I can ask like this.
well,
So the holiday quarter is usually the biggest, right? So last holiday quarter was 1.8 billion. The holiday before that was 2.2 billion. The holiday before that was 2.3 billion. The holiday before that was 2.1 billion. When does the patience run out that the current CEO, so that's 4 holidays. I don't know when he was named CEO, Does anybody have that?
23
I'm sorry.
Last year.
last
Okay,
year.
23.
Thank you.
So is there,
Ryan Cohen's my
at
daddy.
what point would there be, like holiday 24, this holiday season coming up?
I mean, you could look at it from a holiday perspective just based on the fact of trending sales, but at that same point too, if you're going to factor in one company's holiday performances, you're going to have to compare it to all of retail companies' performances over the past few holidays, which have
Yeah,
been
but
complete
this
and utter shit.
holiday
And you're
season,
starting to get into
Palmer
macros
Lucky
at that point. And I mean,
Well,
Ryan
all I'm
Cohen's
saying
on
is
a 5-year contract.
the stock has.
He's at this.
Palmer Lucky just released that the mod retro machine that he's making is going to be released this holiday.
I hope that.
Like that was
I hope it
If
today.
you're
sells like
if you're
crazy.
asking for what kind
Dude,
of
Martin,
timetable,
I know that you think that guy is cool. Come the fuck on. Like that guy has the biggest big dick energy. Like I will get behind anything he
I don't
does.
know how much it's going to sell in terms of moving the needle for GameStop, but I think that it's the big question is when will the company start growing again?
fundamentally speaking,
Probably this year.
I'm not gonna turn around and say that they're gonna have a great holiday season because I don't know what else there's left that they're going to announce throughout the year. My point of contention here is the fact that I don't ride based off of past performances. I ride based off of what direction I believe Ryan Cohen and the refreshed board that he created is taking the company. I believe very sincerely that he is turning the company around. We might see a pretty good, fourth quarter if you want to focus in on the fourth quarter. But I mean, the company itself is also known as a holding company, and now we're aware that they're able to turn around and purchase and make acquisitions, and they're also able to purchase equities and assets. So
Well,
looking at the company in
every
that
company can do
direction,
that, right?
your board has to approve it in the way that they do it.
Yeah, I remember.
Basically,
Imagine if RoaringKitty exercised all his
What is
calls.
okay? Let's try
Imagine
to
what the
stay.
number of
Let's
that
try
would
to
I'm
stay
be.
focused because I think
focusing on what they can do fourth quarter.
I'm
It
just saying,
depends on
I
Tilly,
what
would
the
love to see
you're
him on the board.
changing the subject, and we're just trying to really stay focused on one thing because it's very schizophrenic to go back and forth.
Hey, Martin, what's going on,
So
buddy?
my question, Kevin, was or three or whoever it was.
Kevin can answer it just the same as I can.
Was when does the
Yeah.
company start growing? And I think being a retailer, it's pretty hard to grow. There aren't that many retailers that are growing. Digital distribution of games seems like a losing battle. Maybe branded hardware saves them, but this was also a management team that pitched NFTs pretty hard, and that didn't work. So why should I have confidence that they're doing anything right?
Well, if also like, what are the hardware comps look like from a fundamentals perspective? Like hardware generally, as I
Extremely low
understand it,
margin.
is not a
Yeah.
super right. Exactly, it's a very low margin business. So, and if we take a step back and look, right now it's what, a 9 point something billion dollar company. Who knows? That's going to be extraordinarily volatile. I'm sure we can all assume it's probably not going to stay where it is right now. Whether it goes up, whether it goes down, I don't know. But um, so I mean, what was Martin? If you have the 10K in front of you, what was revenue last year for last fiscal
5.3.
total
5.3.
billion?
Yeah.
Okay, so it's trading on 1.8 times revenue, right? Currently. Now, obviously, that's just against sales. It's almost meaningless, right? And I don't even know that you can't even really do that against earnings, right? But what I'm trying to back into here is like, how much are they actually going to have to sell of these fucking cords to make this thing, even remotely viable?
That was the problem with the NFT business.
Or components or whatever. And again, listen, I love GameStop as much as anybody else. I just walked into a fucking GameStop the other day because I was in a mall and I liked GameStop and buying PlayStation games. I get it. I hope to God I'm wrong. I want to be wrong. I want to be wrong. But at the same time, it's like I think it's tough to watch people walking walking in front of what seems like an economic freight train, but I don't know. I hope I can get a better understanding of like, I get it. There's clearly a turnaround story. There's an interesting management team here. They're clearly betting on themselves. Those are all great things, right? Or certainly can be. But again, from just a simple viability perspective, like, is this all wishful thinking? And I don't know, maybe I'm going on a crusade trying to address kind of trading psychology here, which is obviously very hard to do, but I don't know. It just seems very, very, very unlikely, even given what we've learned over the last 30 minutes about these new business lines, et cetera, et cetera. It just seems tough. But look, again, I hope to God I'm wrong. And if there's anything else that, I'm missing, please, like, tell me, fill me in. I hope so.
I got you. Robert, you and Martin already said that Warren Buffett's the best of all time, right?
I think he generally is certainly one of them, if not the best.
If you asked him what's more important, revenue or profitability, what would he say?
Martin,
so I think he would say future earnings are what determines the stock price.
Okay, perfect. So profitability over revenue. The revenue is garbage. On dropping with GameStop.
In the case of GameStop, they both have bad revenue growth and negative earnings.
Oh no, their earnings are positive now.
No.
Up 99% in the trailing 12 months.
No. Yes. You got to look at the 10K. I don't know what you're looking at, but you got to look at the 10K.
I'll go after that one. I would say that they went from negative 103 earnings for fiscal 23 to 2 cents positive right now on 1.2 billion in cash. They now have over 2 billion in cash. I
don't know where you learned to look at financial statements, but the 10K is the operative document that you need to look at. It's the important document. In terms of like alternatives, there's a drug company that's similar market cap to GameStop called United Therapeutics. Last year, United Therapeutics made $1 billion cash flow. The year before that, they made 800.
I'm not talking about cash flow. I'm talking about earnings. On Apple right now, it says earnings per share are 2 cents.
Earnings are certainly worth looking at. I think
they're positive.
Cash flow is usually what matters, because cash flow is the actual amount of money that you made or lost.
Cash flow is absolutely important. I'm right there with you.
Martin, check your DMs. I think I sent you what Kevin might be looking at. And I think it's the diluted EPS.
Just scroll over. It says earnings per share 2 cents.
I don't know that there are that many people that are better at looking financial statements than me.
I'm not disagreeing.
I know one.
No one's saying that you have it.
I'm just trying to show you. They're looking at a diluted EPS.
I mean, the cash flow last year was negative 204, and they had capex of 35. So it's closer to $250 million of losses. That's not a business I want to be a part of. There's a business you could buy for the same price that made $1 billion last year. Why on earth would I want, for the same price, something that lost 250 when I could buy something that made $1 billion and it's growing?
Like, also, I mean, another question we could ask, like, how many years and how much growth in revenue and profitability and cash flow, however you define it, like, do you expect, or would you have to hold on to this GameStop in order to achieve it? I mean, I guess at the end of the day, it's all speculative, right? So if it's because you're not going to hold it for the 20 years that it would take you to get your money back out of the stock via any fundamental measure, right? So
why not?
You can try.
Why? Well, why? I mean, no, I understand, but I'm saying, so are we in agreement that this is all speculative on price?
No, I think the two people that
it always has been.
Dude,
I think the two people.
Okay, well, that's fair. Okay, so that's some common ground.
The long-term narrative and the short-term fluctuations are completely different with this stock. Obviously, you learn, and like, I would never short Nvidia, but you could get your money back in another 75 years there too.
Well, Nvidia's growing, the fastest growth in corporate history, corporate America. GameStop's a piece of shit that has no revenue growth or profitability.
Oh, actually, they're still profitable.
No,
At 2
last
cents a
year
share.
they lost $250 million. If you think that's profitable, I think you need to maybe get a CFA or something.
That's cash flow still, and not earnings, where it says 2 cents on every single financial outlet you can
I know
Google right
you
now.
think it's smart to look at financial outlets to look at financial statements, but the way pros do it is we look at the SEC filings. Two cents is not profitable either, by the way. That's break even.
Really?
Yeah. When you have $5 billion in revenue and you make $7 million in net income, that's break even.
Look, yeah. I mean, look, I jeez, I wish this was going a different way because fuck, I love, y'all love the stock. I love the store. Like
Robert, I got a question for you. I'll
yeah,
try the
yeah,
last one because
yeah.
Oh, I
nobody's gonna
love
get
the
it. Nobody's gonna
store.
get anywhere on earnings. But would you
Can't stop,
say
won't stop
if
shocking.
Hey, Martin,
if
have you looked at their debt?
All right, guys. I hate to tell you this, but only one person at a time should speak. You're adults, I think. Try to act like it. I don't know. Everyone's sort of had a chance to talk, except maybe Really. Why don't you go ahead, Really?
Yeah. So from a fundamental standpoint, I don't think that GameStop and other meme stocks like AMC were originally bought as squeeze plays or anything like that. I think they were recovery plays, and that's where you see the fundamental thesis come in with RoaringKitty. RoaringKitty preaches a fundamental thesis, and that's where a deep fucking value investor starts to talk about fundamentals, right? He says it's
Well,
deeply undervalued
I
because of
will
the
say this
fundamentals.
just real quick. As a deep value investor, there is absolutely nothing deep value about GameStop.
Okay,
Right?
but
This is
that's see now you're going into opinion, Martin.
well, it's not an opinion. This
It
is
is.
not a deep value stock.
It is an opinion because
How is this a deep value stock? Do you
well,
know what deep value means?
again, if you let me finish, the reason he bought it is
No,
because
listen. I
he
don't.
felt it was deeply
Listen.
undervalued.
Listen. I don't care about that. Deep value means something on Wall Street, right? You sound like a retard. Deep value means a company that's got beaten up, that is at an extremely depressed price, that has cash flow close to its market cap. This company doesn't have cash flow. That's the opposite of deep value. This is speculative. This is not what you would call deep value. That's like 101 investing.
So why don't you short it?
Well, they are
I
short it, obviously, but
I'm not sure.
Martin,
I don't give a fuck
Martin,
about
I
GameStop.
think that's what I'm getting at, Martin, is that it is a speculative play that
That's
they can get
the
back
opposite of deep
to.
value is speculation.
Well, again, dude, you're establishing the fact that you
Isn't that a good reason?
I mean, you can
you're
make money either
establishing
way,
the
but it's
fact
still
that
called
these
deep
things
value.
struggled because of a freaking extreme event in the market, which was COVID, right? Retail stores were shut down.
Retail has
Everyone
struggled
thought
for
they
a
were going.
long time. It's not just COVID.
Again, it was, yes, it did. It bled away a lot of his business. But again, you should be able to raise capital on a company and buy shares to drive the price up. When they took the buy button away, you took away the
What?
ability to raise capital on the company organically through the stock. And that's all there is to it, man. They fucking took it away. This company could have been recovered, and it could have paid down debt earlier, and it could have came out with.
Okay, that was some pretty insane schizophrenia there. I recommend Risperdal or Zyprexa, two strong antipsychotics. You seem to have some issues with reality. I would strongly recommend seeing a psychiatrist immediately. Ben, what's up, man?
Oh my Christ. So the first thing I might get kicked for this, I don't care, but the first thing I have to come up and say is that Kevin Malone loves to project himself as some guy who would see on like CNBC Fast Money. He has 16 million AUM. Martin, you know that you've owned and been in charge of companies that just shit all over that sort of valuation. So like you don't get to come up in here and
Well, listen,
pretend like you're important.
what I would say is that I don't know that he's pretending that he's important, but I will say that he hasn't said anything intelligent yet.
There you go.
At least I haven't heard anything intelligent.
I
I mean,
will wait for the response. And
he's
also his whole idea like around valuation was just so. And I mean, you already talked about this a little bit, but his whole idea around valuation was so insanely flawed. Like, come on, dude.
It's hard to gear on a negative number. You know, I don't know. I think about
What's the
$10 billion.
price to negative earnings ratio?
Well, obviously earnings can go up, right? Revenue has to go up for earnings to go up, typically. There has to be some part of this company that's profitable, and if they isolate that part, how much profits could it be? I would argue that it's not going to sustain 10 billion. To sustain 10 billion, like I said, you can go buy shares of United Therapeutics. United Therapeutics is going to make $1 billion this year. Why on earth would you pay the same price? I mean, imagine walking down.
Abivax.
Ben, hold on. Imagine walking down a store, and you're allowed to buy. You're shopping. You're shopping for a company. That's what the stock market is. It's a store of companies, and you're there to shop, and you're there to get the best bargain. You're there not to get fleeced, right? So you go down the aisle. You go down to the retailer aisle. Okay, in the retailer aisle, you look at the price tag, you see GameStop, and it says 10 billion. You say, okay. Well, you turn over the price tag and you say, well, what do I get for this? Well, you get a company that says, you look closely and you say, okay, their revenue is going down, their earnings are negative. Interesting. Now you mosey down to aisle 2, the drug sector. That's a sector I know. And you see this company, United Therapeutics, and you look at the price tag and it says 10 billion. That's the same price as GameStop. Well, what do I get for this one? Well, I get positive cash flow. That's $1 billion. And it's growing. The management team is very accomplished, et cetera, et cetera. Now, how many of you have looked at all the other $10 billion companies in the stock market and you've determined that this is the one, this is the best one? I venture to say very few of you, because there's a lot of interesting companies in the stock market. And if you could tell me, well, I don't like United Therapeutics because their patent's going to expire and that $1 billion of revenue is going to go to 500 million. I would tell you that it's still a better stock than GameStop, because at least after their patent expires, they're still going to have revenue and earnings. And the management team has proven over time that they're very, very talented and making tons of money. Their management team is a lot more storied than Ryan Cohen, for example. What prospects does GameStop have to get a lot of income? I haven't heard anything yet. I've heard a bunch of hope and copium. And I heard this last year too. And I heard all about NFT marketplace. It was like the worst business expansion ever. If they're going to try something else and try something else and try something else. But the thing about business expansions and new capital initiatives, what's interesting about that, and I think Rob is sort of alluding to this, every company on the planet, including startups, is trying to do the same thing. So there's competition for these same ideas. There's competitions for these same investments. We look at startups every day that want $1 million or want $5 million or want 50, and other companies that are public who have low cost of capital try to do the same things. And if there's a hot market, whether it's yoga pants or custom hardware or pharmaceuticals for PAH, whatever it is, everyone's trying to make money on money. That's just part of the nature of capitalism. This company has not gotten that right for a very long time. New management is great. Maybe they'll do it, maybe they won't. But I like to pay for things that are valuable at the right price. So if GameStop was at 3 billion, I would say that makes a lot more sense because they have 2 billion. That's without looking at, that's including the new raise. And maybe I'll give $1 billion to these stores that don't make any money, and maybe they can use these stores to somehow turn it around and make money off something else. It's kind of like very speculative, but 3 billion is kind of where I'd play. Why play at 10 billion? It seems like foolish. That's how I feel. Tiger, do you have something to say?
I think we're losing the plot. So, Martin, I agree with everything you're saying, by the way. Like, I don't know enough about GameStop to say, like, oh, this EV to free cash flow metric is is stupid or, blah, 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 or anything like that. But at the end of the day, you said you wouldn't short it, right?
No, I short it.
So, right. But it's a point of like, what's the stock going to do? And there's a reason why you wouldn't
No, I
short
short it.
it.
I think it's a short.
You think it's
Sure.
a short here? You sure?
Really?
Yeah, of course. It's worthless. The company's
Okay.
worthless.
Wait. Like irrespective
Let's
of
fucking go then.
Hold on. Wait. Let's just have a reasonable conversation, right? So like, this is very evident in crypto too, right? But GameStop, in my opinion, is not like any stock. Like, I don't think you can do fundamental analysis on GameStop. I just don't think you can. Okay, but it's effectively the same as any meme coin in crypto. Okay, so like, I think when people are getting up here saying it's deep value or speaking out of their ass, okay, just say what it is. It's a meme
Well,
coin. It's a shit coin.
There's a
It's a meme coin. It's a
there's
shit
some
coin.
people with
So that's all it
there's
is.
some people out there with
Okay.
lots of calculators and lots of fancy computer programs, and they generally kind of determine that that's just called beta, right? So that's
Correct.
all. It's all just beta.
From as far as the eye can see, I think it's worthless.
Yes, but it's
Okay.
beta.
As far as I can see, it's a worthless company in a structurally bankrupt sector. Okay, so it's irrelevant. All this shit you're talking about.
No, it's relevant.
Okay.
It's very relevant. I mean, why wouldn't it be?
But do you agree that like trying to look at this fundamentally right now is not really the best use of anyone's
Sure.
time?
Why not? No,
Right.
it is. It is a good use of time. I mean,
It is a good use of time.
yeah, businesses will trade at their value, and if you look at the company,
Eventually,
yes,
I agree with you. Eventually, but right now, is it worth anyone's time?
Sure, of course.
To look at it that way.
I mean, no, we're going to ignore the company's earnings. I mean, it's beta. It's a beta instrument.
If you're looking at it as a trade, I am going to ignore it.
I mean, I'm an investor.
I don't have any position in GameStop. I don't care about GameStop. Like, there's plenty of meme coins and crypto that I don't even need to give a shit about this.
I mean, it's just beta. I mean, at the end of the day, it's just super beta. That's why it's up. And
here's another thing too.
Wait. Let's not just jump around like crazy. Simple, sort of straightforward discussion on this is, when there seems to be stocks that defy gravity in the stock market. This has happened for a long time. It's not the first time. There's a company way back called Travel Zoo that was hot in 2000s. If that's too old for you, there's another company called Taser that was very hot 5 years later. If that's too old for you, there's another company 5 years later that I can pick up, and it's just time immemorial that there are stocks that are overvalued in the market, and they don't seem to have any rational basis for being where they are at. And eventually they go to zero when, usually, like I said, money flows out, the market gets a little sour, and people don't have the expendable income, or people just get tired and sick of it and thing drops anyway. And we've seen this over and over and over again. And the fundamentals, of course, matter. If you're in it for today and out for tomorrow, look, it probably doesn't matter. But,
right, but that's right. But
that's
dude,
not
like,
the way I invest, and that's not the way most of these people invest. Most of these people.
But brother, that's my point. Is I agree with you that it's eventually probably worth close to nothing. Right.
Those are usually the best kinds of shorts.
Eventually,
I mean, they're
the
best.
You can get your face ripped off before it actually goes in your favor.
If you short 50 stocks like that,
personally, I think
if you short 50 stocks like that, you're going to make a fortune.
Okay, but personally, I wouldn't short GameStop yet. It's just not a good tactical play.
People tell me the same thing about AMC. It went down 95%.
I agree that it's worth zero.
People said the same,
but it is not a good tactical position to take.
Try not to talk while I'm talking. People said the same thing about AMC, and AMC went down 95%. AMC was bankrupt basically, and everyone said the same thing. Oh, might go up. Shorting's dangerous, et cetera, et cetera. Yeah, I've been shorting for 25 years. It's a little bit of an art, a little bit of a talent, a little bit of luck, and you try to short shit companies that are going nowhere, and this is a shit company going nowhere. Do you get them all right? No. Did this once go up 100x? Yes. Is it going to go up 100x again? Gee, I hope not. You try to limit your shorts to some extent in size, and you try to be lucky. Look, what happened to Melvin was really, really unlucky. And, it's going to happen once every 10,000, 100,000 trades, and you try for that not to be you. But am I going to sit here and be afraid of a Melvin-like situation if I short 1% of my portfolio in GameStop? No. Could it happen? Sure. It could happen in any of my positions. And, that's why we diversify. If I had 3 positions, I'd be worried. I would suggest people not do that. But it's perfectly fine for a short portfolio. I mean, I think that, whether the timing is right now, this second, or next week, or at this price or that price, look, I mean, that's sort of the talent of a trader. And, like most things, it's very hard to measure, who's right or wrong, but other than over time, this could be the exact top. The guy could get arrested tomorrow. The stock literally goes to 5, or 10 or whatever, or, it could be the beginning of a huge bull run and goes to 200. We just don't know. But, it's each trader has to make up their own mind as to what to do. And, I think it's a perfectly fine short. There's nothing like, like all positions, like they're all legitimate, equally legitimate. It's just a question of what's going to happen and when the cards turn over, are you up or are you down? And, I think even if every single person here says the dumbest thing in the world, that still doesn't mean it's a bad investment. Investments aren't a referendum on who can sound the smartest, right? They're self-defined. They are literally, what does the price do? And some people have an approach where they try to use a computer to trade the stock market. Some people have an approach where they look at charts. Some people have an approach where they call all the market participants and try to think about, where do they stand and what are they going to do? Some people look at value and they make their positions based on nothing but fundamentals and value investment, and that's all they do. I'm like one of those types of people. Everyone has their different way to do things, and every one of those categories has gigantic winners and gigantic losers. There's quantitative hedge funds that have lost literally every dime. There's quantitative hedge funds that seem to print money forever. There's value investors that are terrible. There's value investors that seem to print money for forever and ever, like Warren Buffett maybe. And I mean, it just is what it is, right? I think that in a lot of ways that's the truth about investing, is it just takes time to figure out who's right and wrong. But I don't think there's any a priori way to determine somebody's right or wrong. Like I said, even if every single person here sounds like a complete goofball, drooling retard, says I like GameStop, and every short seller comes in here and is the most articulate, most sophisticated, trader, and most impeccable credentials. I've made $1 billion working for this bank or this family or whatever, and I can tell you that GameStop's a short. Doesn't mean anything to me. It's a matter of, let's look in a year, right? A year ago, Amy and I were on these stages. Remember it very fondly. 2 years to 1 year. We did it for about a year, starting in 2022 to 2023. We told anybody that would listen that AMC was a zero. Anybody that would listen. We tried everything. We tried being nice. We tried being mean. I tried pretending I was a Southern hick buying AMC. I tried. Do you remember that, Amy? We tried every possible angle, and it just didn't sink in. People were just dumb to it, and they lost all their money. And I tried this in 2000, 2005, 2010. You could look at my track record of writing about shorts. I've been wrong. I could be wrong here too, but it doesn't mean that because this is my opinion, I'm right or I'm smarter than somebody or whatever. I think we'll see in a year, right? I don't think that GameStop in a year will be appreciably higher. In fact, I think it'll be lower, but I could be wrong. But I would say, let's look in a year. When the MOAS was happening, people thought that would continue forever. It killed a lot of people. It really lost a lot of money. So I'd say let's measure this in a year. If somebody wants to trade this week or next week, God bless you. Good luck. That's not my game. But in terms of shorting and waiting, I think you could short this and wait 3 months, 6 months, a year and make money. But that's why I don't know. So that's why I make 5,000 investments in a year or 500 or, whatever it is, to make sure that I don't have to live or die by one bet, because living or dying by one bet is for losers. It's it's really not, a way. I know my fallibility. I know that I'm often wrong. So I have to make lots of bets because I just want to make sure that, on average, I could squeeze out some gains. But I know that if I had to pick what stock, if all the stocks is going to be the winner, it's really hard to do. If you gave me 100 stocks and I have to bet that 60 of them will be winners and 40 will be losers, something like that is a little more tenable than saying, this is the one, this is my baby. And again, the approach is looking around that marketplace, going down that supermarket with your shopping cart and saying, what stock can I buy for 10 billion? And looking at every single $10 billion company and being convinced that GameStop is the one. Nobody's doing that. Why? Because you're lazy, because you don't have the time to go through every stock, because you don't want to go through every stock, because you think that you found the key to fortune, but you didn't. All you found is the key to greed and loss. And if you want to work hard and you want to pour through hundreds of 10Ks, talk to thousands of executives, look at and listen to every conference call, guess what? You're going to be up till midnight like me. Your eyes will have bags under them. You'll be overweight because you never exercise, but you'll be rich and you'll find that one winner and you'll find the best stock out of those $10 billion stocks, but you can't name a single other one that you've looked at. You can't name a single other one where you said, I scrutinized the hell out of this and I passed because I found something better. You didn't do that. You were talking about RoaringKitty. How stupid is that? It's the peak of stupidity to say there are 10,000 publicly traded securities. I've looked at one and I'm convinced I found the best one. You say you like the stock. Well, what other stocks do you like? Do you have a portfolio of lots of stocks, or are you just in on GameStop? I think it's something that you just have to think about. We asked all this stuff about AMC. Amy and I have different approaches. We have very different backgrounds. I was a professional fencer for a long time. Then I went to jail and I started a lot of companies. Amy's got a whole other background, more of a retail background. Rob's got his own background. It doesn't mean that we're better than anyone or worse than anyone. There's richer people in GameStop than all of us. And, the only way we can tell who's right and who's wrong is a year from now. And some of us will be right by accident. Some of us will be wrong by accident. And our next trades will be even better. But I'd implore anyone not to be all in on a stock, because it's not really how finance works. It's very hard to make to be right all the time. And I think Keith might eventually find that out the wrong way. Now, look, some people might be able to live the dream, which is to go from $50 to 50 million. It's really never happened in history. But maybe it'll be you. I don't know. But I don't think it's going to be through GameStop. I think it's a $10 billion company worth closer to $2 billion. I appreciate all the interest. There's a lot of excitement around this. I have an early morning call, so I don't have the time to go through everyone. A lot of people came up, and we made this more of a discussion than a drive-by one by one. But maybe tomorrow we can do it again. I know that we did this, Amy and I did this for literally, it was our nighttime hobby. Absolutely no benefit to us. Zero benefit other than trying to do the right thing and trying to talk about investing and what we've learned over the years. Her from more retail side, me from an institutional side and high net worth side. And, no one wants to hear the hard things. Everyone wants to hear that everything's going to be good. Just diamond hand a little longer. Don't worry, GameStop's going to be the greatest thing ever. When it's just a shitty old retailer that's not growing and not profitable. That's the hard thing to hear. And then it's also hard to hear that one man's trade doesn't mean anything. Did you know that of every stock on the planet, someone has to own all 100% of the market shares? Every share outstanding has to be accounted for by somebody. And it doesn't mean anything if the people that are counted for, but the people that own those shares are smart or stupid, or they're mutual funds or hedge funds, or they're Warren Buffett or they're Keith Gill. It doesn't make a fucking difference. Somebody has to own those shares. Whether or not they're going to make a ton of money, who knows? Warren Buffett buys losers. Renaissance had a year where they almost thought they were going out of business. Nobody knows. Over the long run, you'll measure your wins and losses and adjust your sales to sail the seas of the supermarket of stocks. But, I think that we can all agree that blindly picking a stock is probably unlikely to win. Ignoring all the other stocks in the stock market is probably not a good idea. Putting your fingers in your ears whenever anybody says something bad about the stock, the one stock you looked at, the one stock you like, that's probably not smart. Going all in on one stock and risking loss if you're not 100% right, that's pretty dangerous. I think that, these are all just common sense things that, work for me. They don't have to work for you. If you get entertainment value out of buying a stock that you like and you get community out of, that's your business. I play video games. That's a weird thing. I should probably go look for a wife, but it's what I enjoy. And if you like buying stock like GameStop and you like to talk to other people about who've also bought it, I can't blame you. I'm not going to judge you, but I don't think it's a good investment. But again, I could be wrong. It could be a great investment, and I wish everyone luck. I don't have a position, but even if I did, I don't give a fuck what anybody thinks. I'm not trying to influence anyone. One man, one person can't change the market for long. I've learned that over a long career. You can try to pump a stock. Eventually, the supply and demand will equal. By pumping the stock, you create a seller's dynamic because the price has gone up. There's going to be people who want to sell. It really doesn't work. I've tried everything over the long career. So, when we talk in public, it's because we want community. We want to affiliate. We want to make friendships. We want to argue and debate. It's not for some nefarious reason. I don't trade the stock market a lot. I'm an entrepreneur. I create business value for my business. Hope to sell my business one day for zillions and billions of dollars. I'm really not unlike a Ryan Cohen, for example. And, that's my goal. But I like stocks. It's been a hobby of mine for a long time. And I love to share, love talking online since the IRC and AOL days. And I'll be talking online till 2050 and 2060, God willing. But yeah, again, I certainly don't pass judgment on anyone that likes the stock. I disagree with a lot of the points that were raised today, but I could very well still be wrong. Sometimes the most sophisticated sounding investor, I met these guys in biopharma. They have PhDs in every discipline. They think they really know about the medicine. They know everyone in the community, from CEOs to doctors, etc. And these guys lose their shirts to a plumber named Joey from Brooklyn. So there's really no credibility that is always right. David Einhorn was a hedge fund manager that had the hottest hand. He could not lose. He got up to 10 billion in assets. Every year thereafter, he didn't make a fortune. He lost either lost money or had a very small gain. Sucks. It happens. In the 2000 era, people thought Warren Buffett was washed up. They said, there's no way Buffett's going to come back. He's an old hag. He's lost his way. He's never going to make money again. And he missed the tech boom. And he said, I'm sticking to my guns. And he was right. But he could have been wrong too. We just, life is not that deterministic. So I'd say, let's see what happens in a year. I still am going to, do these calls and maybe try to talk some sense into people. But yeah, I appreciate everyone listening, and we'll maybe see you again tomorrow or something like that. Thanks again.